Imagine a company so powerful it could manipulate an entire state's energy supply. Now picture that same company crumbling to dust. This is the tale of Enron. Born in the mid-80s, Enron quickly rose from obscurity to become a dominant force in the energy sector. Its innovative approach to trading energy commodities revolutionized the industry, and soon it was a behemoth impossible to ignore. With key figures like Kenneth Lay and Jeffrey Skilling at its helm, Enron was unstoppable. Investors flocked, stock prices soared, and the financial community sang its praises. It was a giant basking in the glory of its success, seemingly invincible. Yet beneath this veneer of success and power, a storm was brewing. A storm that would eventually bring this titan to its knees and expose a web of deceit and corruption. But how did such a giant come to be, and what led to its dramatic downfall? In 1985, a new player entered the energy industry, Enron, a company that would revolutionize the sector and become a darling of Wall Street. Born out of a merger between Houston Natural Gas and Internorth, Enron had a vision that was bold and innovative. At its core, Enron was a natural gas company, but it didn't take long for it to morph into something far more complex and ambitious. The company set out to transform the energy sector, introducing a whole new approach to trading energy commodities. Enron's brainchild was the energy futures market, a platform where energy, like gas and electricity, could be traded just like any other commodity. This was a game changer. It allowed Enron to buy cheap and sell high, reaping massive profits in the process. This innovative approach to energy trading wasn't just profitable, it was explosive. Enron's rapid ascent in the energy sector was nothing short of phenomenal. Within a decade, it had grown into one of the world's leading energy companies, boasting revenues in the billions. But Enron wasn't just a company, it was a collection of brilliant, albeit controversial minds. At the helm were key figures like Kenneth Lay, the company's charismatic CEO, and Jeffrey Skilling, the mastermind behind Enron's aggressive growth strategy. Lay's vision and Skilling's ruthless execution were instrumental in Enron's rise to prominence. Yet as the company grew, so too did its risk-taking. Enron's relentless pursuit of growth saw it venture into new markets and industries, from broadband services to water management. This expansionist approach was not without its critics, but for a time it seemed that Enron could do no wrong. The company was hailed as a pioneer, its success story a testament to American entrepreneurship and innovation. However, beneath the surface, things weren't as they appeared. The company's aggressive growth strategy was fueled by a complex web of financial engineering and questionable accounting practices. As Enron grew, so did its ambitions and its appetite for risk. From the outside, Enron seemed unstoppable, but beneath the surface, a complex web of deceit was being woven. This multinational corporation, once considered the gold standard in the energy sector, had an underbelly filled with questionable accounting practices. The company's financial statements were as complex as a labyrinth, designed to confuse and mislead. Enron used off-balance sheet special purpose entities, or SPEs, to hide a mountain of debt and inflate profits. These SPEs, with names as obscure as their operations, were like hidden time bombs in the financial landscape of the company. And yet, the company's stock prices soared. Like a siren song, these numbers attracted investors from all corners, lured by the promise of robust returns. The company's stocks became the darling of Wall Street, with analysts singing praises and investors clamoring for a piece of the Enron pie. The financial community was bedazzled by the glittering facade of this energy giant, oblivious to the shaky foundations upon which it stood. But it wasn't just about manipulating numbers. Enron had an insatiable appetite for expansion. The company ventured into new markets, from water and broadband services to weather derivatives. Each of these ventures was presented as a golden opportunity, a new frontier for growth and profitability. Yet many of these ventures were based on speculative and unproven business models. This aggressive expansion further complicated the company's financial situation, adding layers to the already tangled web of deceit. While all this was happening, Enron was being lauded as an innovator, a trailblazer. The company's audacious approach to business was seen as a model for others to follow. Its executives were hailed as visionaries, their bold strategies applauded by industry insiders and experts. The financial press was enamored with Enron's success story, painting a rosy picture of a company that was reshaping the energy landscape. But behind this facade of success and innovation, the reality was far from rosy. The company's aggressive accounting practices, risky ventures, and unethical behavior were all part of a grand illusion. An illusion designed to deceive investors, regulators, and the public at large. An illusion that was about to shatter. As the old saying goes, pride comes before a fall. And Enron, with all its pride and hubris, was heading towards a precipice. The company, once the seventh largest in America, was on the brink of a collapse that would send shockwaves through the global business community. But as the saying goes, what goes up must come down. A phrase that would soon become all too real for the once untouchable energy giant. The stage was set for one of the biggest corporate scandals in history. A scandal that would change the way we think about business ethics and corporate governance forever. Unethical practices, market manipulation, off-balance sheet transactions. This was the dark side of Enron. Enron, a company once lauded for its innovation, had a sinister underbelly. Its aggressive pursuit of profits and growth lured it into a dangerous game of deception and manipulation. The company exploited loopholes and gray areas in regulation, engaging in practices that, while not immediately illegal, were certainly unethical. Enron's involvement in the California energy crisis is a case in point. It was accused of artificially creating energy shortages, driving up prices, and profiting from the misery of millions. With rolling blackouts and skyrocketing bills, the people of California were left in the dark, both literally and metaphorically, while Enron filled its coffers. However, the company's questionable practices weren't limited to market manipulation. Enron also created complex financial structures known as special purpose entities, or SPEs. These entities were essentially shell companies designed to keep significant amounts of debt off Enron's balance sheet. By doing so, Enron was able to maintain the illusion of profitability and financial stability. This chicanery was not just a clever trick, it was a deceit of monumental proportions. But every house of cards has a weak point, and Enron's was no different. Enter Sharon Watkins, a vice president at Enron, who in 2001 raised concerns about the company's accounting practices. She warned that Enron could implode in a wave of accounting scandals. Despite her efforts, her warnings were largely ignored until it was too late. Watkins's whistleblowing was a beacon of integrity in an otherwise murky situation. She tried to expose the rot within Enron, the hidden debts, the inflated profits, and the lies that formed the company's foundation. But, as we'll see in the next scene, her warnings were just the beginning of the end for Enron. The cracks in Enron's facade were beginning to show. In 2001, the house of cards that was Enron came crashing down. A corporation that once commanded the energy sector was now reduced to rubble. Let's delve into the downfall that shook the world. Enron's shaky foundation started to crumble under the weight of its own deceit. The Securities and Exchange Commission, the watchdog of Wall Street, began to sniff around. The financial irregularities that Enron had so cleverly masked could no longer be hidden. The SEC's investigations pierced through Enron's facade, revealing a labyrinth of off-balance sheet transactions and complex financial structures. As the SEC bore down, the media followed suit, illuminating the dark corners of Enron's operations. This exposure was a shock to the financial community, who had been wooed by Enron's high stock prices, an innovative approach to energy trading. The once golden child of Wall Street was now being unmasked as a fraud. The final blow was dealt when Enron filed for bankruptcy in December of 2001. The filing didn't just signify the end of Enron, it marked the end of an era of unchecked corporate greed. Enron's fall from grace was not just a company going under, it was a seismic event that sent shockwaves throughout the global business community. Enron's downfall was one of the largest corporate scandals in history, a stark reminder of the damage that unchecked ambition and unethical practices can inflict on an enterprise and the wider business world. The story of Enron serves as a cautionary tale for corporations worldwide, a tale of unchecked ambition, unethical practices, and the illusion of success. From its meteoric rise to its dramatic fall, Enron showed us the dark side of corporate greed and manipulation. It highlighted the importance of transparency, ethics, and accountability in business. In its aftermath, regulatory bodies worldwide tightened their grip, forever changing the corporate landscape. Enron's legacy, a stark reminder of the consequences of unchecked ambition and unethical practices. Thank you for joining us on this journey through Enron's rise and fall. It's a story that's as fascinating as it is cautionary, a stark reminder of the fine line between ambition and avarice, innovation and illusion. From its meteoric rise to its devastating downfall, Enron's story serves as a potent lesson for all of us. We hope this deep dive has stirred thoughts and ideas. Perhaps you have insights, opinions, or questions you'd like to share. We're eager to hear from you. Your perspective enriches the conversation and helps us all learn. If you found this exploration intriguing, consider subscribing. We delve into a wide array of topics, from corporate scandals to business triumphs, each told with the same commitment to depth and clarity. Until next time, remember, in business as in life, integrity matters. It's not just about reaching the top, it's about how you get there. Stay curious, stay informed, and most importantly, stay ethical.